Now let's get to our top story and what's causing that sell-off. The global market's falling sharply after President Trump threatened to impose new tariffs on $300 billion worth of Chinese goods, escalating the trade war and rattling investors. The president tweeting, during the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. Joining us now from Washington is Yahoo Finance's Jessica Smith. Now, Jess, as we know, we frequently get a presidential tweet and then sort of policy or protocol to follow. So what do we know about how this is going to be put into place and what goods are going to be affected?
Well, it seems the president was not happy with how talks in Shanghai went earlier this week, and now he says he will be putting these tariffs in place. We have some wiggle room here until September 1st, so there is a little bit of time to get this going. He said that was because it takes a while to get the goods from China to the U.S., so he was putting in that time frame. He kind of shut down the idea that he was trying to give negotiators room to work something out before putting these tariffs in place. Now, these will affect mostly consumer goods. That's why Treasury Secretary Steve Mnuchin said they held off on this last round because it was largely consumer goods. Now, the president insists that China will be paying for this, though retailers and experts warn it will be the consumers who pay the price of these tariffs. He said he's going to keep taxing China until there is a deal, and he has been lowering expectations for a deal anytime soon. At a rally last night, he again said that he thinks China could drag this on through the 2020 election.
Oh, they're praying. They're praying. They would like to see a new president in a year and a half so they could continue to rip off the United States like they've been doing for the last 25 years. They would love to see a guy like Sleepy Joe Biden, who has no clue what the hell he's doing. They'd say to Sleepy Joe, "Sir, just sign right there." "Oh, okay."
Business groups were quick to respond to this announcement yesterday. We saw the Chamber, the NRF, several other groups put out statements blasting this decision. The NRF put out a statement saying, "We are disappointed the administration is doubling down on a flawed tariff strategy that is already slowing U.S. economic growth, creating uncertainty and discouraging investment." Now, China has threatened to retaliate, and they have already run out of U.S. goods to tariff, but there are other ways they can go about striking back here. They can basically make life more difficult for U.S. companies with more frequent inspections. They could delay licenses that U.S. companies need. So we'll see what happens there. And if these talks end up happening in September, that's when the next round of talks were set to happen here in Washington. So we'll be sure to keep you updated as this situation plays out throughout the day.
Jess, thank you. Appreciate it. We are joined now by today's panel. Yahoo Finance's Brian Chung and Pras Subramanian. Also joining us is Gordon Chang. He's author of The Coming Collapse of China and frequent guest with us to talk about the situation in China. So we've got now, Gordon, this ratcheting up with President Trump talking about this latest imposition of tariffs. What do you think is going to be the reaction from China?
Well, yeah, China said that they're going to take necessary countermeasures, but there's really very little that they can do. What they can do would hurt themselves more than it would hurt us. You know, Julie, I think the big story here is that the interim deal that Trump and Xi Jinping, the Chinese ruler, arrived at the Osaka G20 was extremely favorable for Beijing. It involved, buying more ag products that the Chinese had to buy anyway. And they got a reprieve for Huawei technologies, which was really critical to them. But, they could not even honor that deal, which was extremely favorable for them. So I think something's pretty wrong in Beijing right now. I don't know exactly what it is, but when they cannot go forward on an arrangement that helped them and didn't help us, something is saying that, in China right now, the political system must be frozen.
So Gordon, it's good to see you. I'm curious. I read your op-ed this morning in the New York Daily News. How would you describe Xi Jinping's reaction to what's happening? And how would you make the argument that the United States and President Trump with these policies is winning?
Well, I mean, what's happened in Beijing right now is just inexplicable. I don't know what's going through Xi Jinping's mind. Apparently, he can't force through concessions that he had agreed to with U.S. trade negotiators in April. We saw that when they returned the draft agreement in May. Also, he couldn't go forward with this simple interim agreement at Osaka. So Who knows what's going on in Beijing? You know, in terms of really the whole thing, I suspect that when you look at it, we're getting supply chains out of China. We're reducing our vulnerability there. And that's important because you got to remember that each year China steals hundreds of billions of dollars of U.S. intellectual property each year, probably about 300 to 400 billion. And we've got to do something about it. So if people don't like tariffs, I can understand that. But obviously, something has to be done. And right now, you have the Democratic Party leadership behind President Trump. So, you know, I think that essentially we're in a pretty good position. Got a more robust economy than they do, and we've got a united political system. And obviously, something's going very badly in China.
Hey, Gordon, Brian Chung here. So we heard from that brief clip that we played from President Trump at the start of this segment, just where he was hinting at the idea that maybe this could last through the election or at least up until the election next year. If it does extend that long, who has more to lose here? Is it the U.S. or the China, given that the Chinese economy is starting to slow down? But then there are worries, given what the Fed's done this week, that the U.S. economy might be facing a slowdown too.
Yeah, we obviously are going to slow down. We saw that as you look from first quarter to second quarter growth. But we can maintain this, especially because China is not growing at the 6.3% pace that they claim for the first half. It's probably 1%, maybe 0. Who knows where it is right now? But it's obviously in trouble. You know, I think we can weather this because although consumers will bear a portion of these new tariffs if they go into effect, most of the cost will be borne, I think, by Walmart's shareholders. The retailers are making these really big margins on sales of goods that are manufactured in China. So, you know, essentially, they're going to bear a large portion of the tariff costs. And that means consumers will feel it. But you got to remember, all of this goes away in 9 months, maybe a year, when these factories move to Bangladesh, Vietnam, wherever, and then there are no more tariffs. So this is really good for the U.S. because we reduce our vulnerability to China.
Gordon, where do you get 1% to flat from in terms of the GDP growth in China? On what are you basing that?
Well, at the end of December, a professor at Renmin University said that China was going to grow no more than 1.67% in 2018. And he said the growth might even be negative. And you can see the deterioration in the Chinese economy since then. The underlying indicators for June all showed negative. Both PMIs for the manufacturing sector were below 50. You had car sales down something like 9.6% for the month, the 12th straight month of decline. Imports were down 7.3%. That's a real indication of domestic demand. The first numbers for July don't look very good either. So, you know, you're talking about an economy that is, basically hovering around zero, maybe a little bit above, maybe a little bit negative, but certainly not at the 6% growth that they're claiming.
All right, thank you, Gordon. The Coming Collapse of China author Gordon Chang.